bringing new forms of collateral eligibility, into the marketplace, like, tokenizing money market funds that are highly liquid. That makes a whole heap of sense. So there's lots of things that are very sensible about it. Do I think it will go as far as fundamentally changing the underpinning market infrastructure? I'm not so sure, certainly not in the early stages. Like, we both know how slow-moving the financial services industry can be. We operate in a highly regulated environment, so I think it will probably be a relatively slow start once these things do start to happen. I think the existing rails will probably dominate for the early part of this. Now, when you think about settlement, the whole idea of tokenization is to get instantaneous settlement, reduce settlement risk, reduce risk more broadly. So I think blockchain around settlement, absolutely. I think the broader rails that get you there will probably stay in place for a significant period of time.
How have geopolitical risks affected your clients?
I remember us sitting here this time last year and we were talking about the volatility in the markets. I think we talked about them being here for the foreseeable future. I think we were pretty much right. How it expressed itself in our business is, clearly more volatility, more mark-to-market movements, more daily collateral moves, and so we are clearly seeing lots of spiky days in collateral management moves. In terms of client preparedness or impact on clients, look, the whole concept of what we do at CloudMargin is like we're taking the pain away from that. So volatility, lots of moves, high frequency of moves. What you really need in those types of environments is you need high levels of automation, you need technology resilience, you need to know your platform's going to be there operating and be up and functioning for you, and kind of being a cloud native SaaS platform. Like, that's what it's all about for us, right? Is being an agile, nimble, high uptime platform. The manual processes that have kind of always existed in the background of collateral management, the whole point of CloudMargin is to bring really high levels of automation. Like, you cannot operate your business in high volatility times where you are reliant on manual processes, and those are going to be unable to support those manual processes. So we bring really high levels of automation, high levels of transparency of your assets, and the ability to control the assets you are posting around the industry. So you're not posting things that's going to cause you a squeeze, and you're going to be in forced liquidations and pretty costly forced liquidations when markets are really volatile.
Where are you seeing the strongest demand right now?
We have a pretty broad spectrum of, large asset managers, hedge funds, dealer banks, and other sell-side institutions like regional banks and asset services. Not because of the market dynamics, but because of what we are doing, and because of where we want to invest in our platform. A big focus for us is kind of more into those GSIB, larger FCMs. We're really focused on our product development roadmap in kind of cleared, exchange-traded derivatives to really help those institutions like the large FCMs, the direct clearing members, the direct exchange members, be able to utilize our product in the way other large parts of the market do.
How do you view tokenization from a margin management perspective?
We've been listening to this narrative for 7-8 years, so there's kind of been a focus from the industry about tokenized assets in the institutional space for a pretty long time. There's been lots of false starts. We were actually the first company to do a full POC in this space, but that was probably 5 or 6 years ago. The company we did it with no longer exists because they were just too early out of the gate. Great product, great technology, great idea, but the market just was not ready to coalesce around it. It feels a bit different now. It feels like there's a bit more momentum behind it. We're actually participating in a US sandbox exercise being run by one of the big market infrastructure players that wants to be around the tokenization and the mechanisms of delivery of tokenized assets. Participating in the big US sandbox in a few weeks' time. From CloudMargin's perspective, it's just another asset class. So we have highly flexible eligibility rules. It's just a case of adding a new eligibility criteria that would be the tokenized asset and then the settlement of those assets. So for us, it's kind of not a big deal. We're just waiting to see where the liquidity of the idea starts to coalesce.
Why did you partner with Derivative Path?
They have around 300 plus regional banks using their platform. They use it on more of a front to back basis for trade execution and trade execution downwards. Those clients are beginning to have very sophisticated collateral requirements. So for them, it made sense to kind of have a partnership and be able to utilize what is our kind of market leading platform. For us, that part of the market is difficult for us to penetrate on our own. And so the partnership made a whole heap of commercial sense. What I'd say is, they've also built a phenomenal business. They're great guys. I think that always helps. When you're putting partnerships together and commercial partnerships, people we liked, we trust, very similar DNA to us, very similar culture, and we've both kind of got the commercial view of really trying to solve more problems for our clients. And by putting the two products together, it solves more of the problems. And so, it's something we're really, really excited about. And the US regional banks, there are a lot of them, and they do a lot of important activities here in the US markets.
How does CloudMargin connect front office activity to real-time collateral decisions?
The whole thesis behind CloudMargin has always been about consolidating multiple asset classes into one workflow platform. Because if you centralize more information, more data, you get a lot of efficiencies created from that. But then you also start connecting collateral pools, so you can start optimizing across those collateral pools, which gives you the opportunity to save a lot of cost or think about alpha generation in a different way. So look, that's kind of always been the core thesis of what we do. The demand for that, if you think about organizations that we service, the larger, more complex organizations have more silos naturally because of the way they've grown up their businesses. They tend to live in a more siloed environment. And so for us, again, helping solve into those larger financial institutions to bring together more of the disparate kind of processes they have around whether it's foreign exchange, whether it's the emerging markets businesses, whether it's fixed income, whether it's your commodities business, whether it's your exchange traded derivatives business. All those businesses operating in distinct silos makes very, very little sense. And from a core processing perspective, it's more expensive to do that. So we think about things of having a simple way of connecting and a simple way of extracting data from those organizations to bring it into the platform so that we can then run a very stable process for them, and then they can think about the pools of collateral coming together and provide them with kind of really truly transparent optimization, but also truly transparent kind of reporting and risk reporting out of it, like real-time ability to adjust the rules that they want to operate by and the risk parameters, so that in times of market stress like we're in today, they can decide that they want to allow less of certain assets to move around the industry and more of others, or restrict things so that they're managing their business in a safe and efficient way. And I think, look, that's where our platform is really finding itself in a differentiated position, is that real-time risk management.
What are the most important upcoming structural changes?
What's shaping our product roadmap is really what we want to achieve over the next 18, 24 months, but also what our clients want us to do for them. In terms of, the broad brush of things that are going on out there, US Treasury clearing is something clearly that's coming. There's going to be a regulatory mandate. It's going to change the market dynamic. And so we are adopting to that, and we will provide solutions to allow our clients to be able to manage the cleared kind of treasury market. Tokenization, we've talked about. It's a thing. Hopefully something starts to happen, but they're not things that are going to dominate our product roadmap. Our product roadmap is really being driven by, as I said earlier, where we want to go, but where we want to service, the larger, more complex GSIBs and financial institutions that have real problems in and around the siloed nature of their businesses today, and how we can break those silos down and how we can bring all the value creation that we discussed.